I'm Rich Harvey, CEO and founder of Propertybuyer. In this update, I'll share with you my outlook for property prices over the next 12 months. As the winter chill starts to bite, so too will higher interest rates for borrowers coming off fixed cheap rates. During the winter months, the property market traditionally goes into hibernation. This winter, we're likely to see continued activity simply because sales volumes are down 30%. Vendors are taking advantage of a market in recovery. The lack of available properties for sale is creating significant competition and pushing prices higher once again. We're likely to see more properties coming onto the market in late July and early August. One of the primary driving forces of buyer demand is the massive influx of 400,000 migrants expected to arrive on our shores this year. This is putting significant pressure on our housing markets. As a result of this post-COVID migration boom, we're seeing national vacancy rates around 1%, a significant shortage of rental properties, and continual rental increases. All the talk about potential recession, global instability, and rising interest rates makes the average buyer nervous about making a property move. But history has always shown that real estate is one of the best hedges against inflation and one of the most stable wealth-creating assets. Another critical factor that will drive property prices higher is the significantly lower volume of building approvals. Now, building approvals across Australia typically are around 160,000 per annum, but around 30% of these approvals are either not completed, delayed, or simply shelved. So that means only around 112,000 dwellings actually get completed, while the underlying demand is 180,000. So simple mathematics shows we're 68,000 dwellings short, and this is likely to compound over the next 3 years as more migrants arrive on our shores. Price modelling undertaken by the chief economist at Domain has predicted that 5 capital cities are on track to set new price records over the next 12 months. Sydney is set to turn around its price correction and lead the charge with house prices rising between 6% to 9% and units rising 2 to 5%. The Melbourne market is expected to stabilise with house prices rising around 2% and units 1%. Now, the Brisbane market is expected to perform strongly with house prices rising to a new record by the end of 2024, up by 4% and units 1%. While in South Australia, Adelaide will perform strongly with house prices set to rise 2 to 5% and units 1 to 3%. Over on the East Coast, Perth is showing promising signs of recovery, with house prices and unit prices both set to rise 3%. So to summarise, the sheer volume of natural population increase, migration, combined with ongoing demographic trends and housing shortages, will continue to be the major driving forces for the property market. I'm Rich Harvey, thanks for watching.